If you're sick of seeing that same Activate Windows watermark over and over, snag an OEM license from SCD Key. You'll have a fully activated OS in seconds, and you can kiss that watermark goodbye. And be sure to use menu offer code GSL for that sweet discount.
Hey there, for those who don't know, my wife and I just recently had our first child, or I suppose Lisa more specifically gave birth to our son. I did not give birth to a child. His name is Gregory III, and he is the best thing straight up to ever happen to me. But kids are a handful, parents know that, and having extra space in the house can help quite a bit. Our current apartment was way too small. It's not current anymore, but the apartment we were in for the last year or so. I had 2 bedrooms. One of those was my office, and it wasn't gonna work. I wanna talk finance with you guys because we decided around that time to buy a house, this place that we're in now. It is much bigger than an apartment, and believe it or not, despite it being the biggest purchase of my life, it's actually cheaper to live here than it was to live in that tiny apartment. I wanna talk about all of that in this video. So I wanna show you a few clips here and there of the house being built, maybe a few pictures as well. We did build this, not ourselves with our 2 bare hands, but we built it kind of to spec. It's more of a cookie cutter house, but we were able to change a few things. We added a 5th bedroom. We were able to customize the kitchen almost completely, choose the carpeting, things like that. But the overall dimensions of the house, with the exception of, again, adding that extra bedroom, were kind of set in stone. We could choose what style house we wanted, but that was about it. I also want to be candid with you guys about the difference in price, because I think that's like a huge, that's a huge factor for a lot of people when choosing to buy a house versus continuing a lease, right? It's just, when you lease, that money's completely gone. It's down the drain, you'll never get it back again. Whereas if you're buying a home, at least further down the line, you're building equity to a pretty decent extent. Up front, like I am now, this is a 30-year conventional loan. We put 20% down, but after that, all of my payments, for the most part, are going to interest for the first 5 or 6 years. You don't actually start paying more into principal than interest until about the 8 or 9 year mark, and there's a huge amortization chart I can show you, but yeah, if you do the math, it actually, we're paying the bank the interest for the first 8 years more so than we're paying to actually own the house. One of the downsides of deciding to buy a house, or I should say, taking out a mortgage to buy a house, it's a downside. If you're just paying straight up cash, I think that's the best way to go. But let's be honest, how many people can do that? So let's start off first with monthly payments. To live in that small 1,200 square foot apartment where you saw videos like this one being filmed, I paid $1,480 per month, plus $150 for my garage, which I needed for my car, and the dozens of PC case boxes that add up pretty fast. Trash and pest control are bundled in for another 40 bucks a month. The pet fee for Pepsi, who is somewhere, I don't know where she is right now. That was another 15 bucks a month. I know that's like small fish, big pond stuff, but still it adds up. And we haven't even touched utilities, none of which were included at the old apartment. So yeah, just to live in the apartment, we pay around $1,600 per month. That's $1,600 for 1,200 square feet of living space, which isn't very big. I'll put the square meters here. I know Europe does that. 2 bedrooms, one of which I use for my office, a living room, a kitchen, and that's really about it. That was really all there was in the apartment. But the house we built in, where I'm at right now in Central Florida, has more than double this space and comes with a monthly payment that is pretty similar to what we paid at the apartment. Actually, just under $1,600, about $1,597 when you bundle in the HOA fee. I know, right? And then the CDD, which is like we have a community pool, or we should, but they haven't built it yet. A few other things tacked into that. But anyway, yeah, it comes out to around $1,600 bucks for, again, more than double the living space. And I get my own lawn to cut. How awesome is that? God. And look, that's one of the first things you'll typically notice about renting versus buying. I mean, sure, a mortgage is a hassle and the applications seemingly never end. You have to give up and disclose so much information about yourself to the financial institution through which you choose to finance your home. It's usually a bank or maybe your builder, although I'm sure they'll sell that loan off right after it's complete. We're talking 3 years of tax returns, right? W-2s, invoices, hard credit pulls, and more. And if you don't like their interest rate, you'll need to go through the entire application process again and again until you're comfortable. Luckily, we were able to buy our interest rate down from, I think we were quoted at 4% a few months ago. Well, actually, it was almost half a year ago. We bought it down for, I think, $2,000 to like 3.75%, which was pretty good at the time. Now I think you can get it even lower if you refinance, but we're talking maybe 0.25%. It's not a big enough deal to make me want to redo the whole process again. But anyway, we'll talk about buying down rates and stuff more in a second. In a nutshell, a reason some folks choose to rent for life, because they don't want to do all of that application crap. They don't want to deal with it. I totally get it. Some people actually don't even have credit, or maybe they have bad credit and they could just prefer casual lifestyles, whatever. And in some cases, leasing can be cheaper than owning. But in Florida's case, for the most part, homes outside of town are pretty cheap. And since I work out of the house, we had the pleasure of shopping in areas where the price per square foot was relatively low. If you can find anything for under 100 bucks per square foot in Florida, you're sitting pretty fancy. And we, I think, got this house for 89, 90 bucks a square foot in that price range, which is pretty good. So specs, our house is approximately 2,900 square feet, 5 bedrooms, 3 bathrooms, a 2-car garage, our own grass to cut. God, I love that. And yeah, that's actually something I'm looking forward to, believe it or not. I used to mow the lawn at my parents' place all the time. They paid me like 20 or 30 bucks to mow the front and backyard. They sat on a half-acre lot, so it wasn't a job you could just get done with a push mower in 30 minutes. But anyway, I take pride in my work. I loved mowing the lawn in a weird, sick kind of way, but it's great to be able to look after my own lawn again. And I mean, come on, it builds character. And remember, we're also getting all this extra space for the same price per month as the tiny apartment. So how does it work? For one, you gotta go into debt. A lot of debt, especially if it's your first house. And depending on how structured it is, you could be in said debt for decades. We financed our house with a conventional loan, 20% down, no PMI because we did put 20% down, and with a market value of just over $250,000 around the median house price. Actually, the median house price is around $200,000 in the States, so we're a little over that. But we bought this size house so that we could kind of expand into it and not anticipate moving again for the next 5 or 10 years. You never know what the future has in store, but I could see ourselves being comfortable in here for a long time. And because I'm in a decent enough financial situation to do it, I wanted to get this size house while I could. So the mortgage on its own, that's just over $1,000 per month. Then you have to add property tax. You will pay that for life. For us, nearly $200 per month for this address here. Then add insurance. We'll round that to around $100 per month. We're actually overinsured for this house, which I think is safe. Then add any HOA fees. So when it's all said and done, in our case, again, around $1,600 per month. But for more space, I'm about it, right? I'm not gonna complain. Another great reason to consider a mortgage over leasing is equity. When you rent an apartment, your payment totally disappears. You're not getting any of that money back. It cannot be recovered. It's a bit like kind of leasing a car, assuming you can't buy it out at the end of your term, although usually you can. You'll never own the title in the case of a lease. It's not your car. And sure, I mean, you don't technically own your home either until the mortgage is paid. I mean, you do, you are a home owner, but the bank can foreclose you if you don't make your payments. So do you really own it? I mean, you can sell it, it's yours, but you're in debt at the same time. But the important thing is, throughout this process, you are building equity. Granted, you're building equity at a very slow rate at the very beginning because, again, you're paying the bank more in interest than you are in actual principal, apart from the 20% that you already put down. And if you're paying more in principal than the minimum, it accumulates quickly. That's the key. If you can pay more per month than your minimum payment, which in our case is, again, $1,600, then all of that extra money goes straight into principal, into equity. It's what you end up that's the value of the home that you've paid for. So if I sold the home with $60,000 in equity, then I would get $60,000 back. The bank would take the difference, and there you go. So it can be a great way to build long-term wealth if handled maturely. That's why so many rich folks especially invest in property all over the globe. Land is one of the few things on the planet that will never be worth zero because there is a very finite amount of it on which to live and on which to build. Interesting side note, actually, you could have found yourself stuck in an 18% interest rate in your mortgage a few decades ago. Right? Can you imagine that? Depends on several factors, but rates today are generally great. We just talked about that, but the company through which I financed quoted me originally, I think it was at 4%, a little over 4%. I think it was 4.125. Pretty sure. That's not bad. At the time it wasn't, but I was able to buy it down to 3.75% for around 1% of the total mortgage. In my case, it's just over $2,000. So it'll pay for itself in only a few years. It's a great option if you have the extra cash to put down. One other thing I wanted to mention, a bit off topic again, but still interesting for those business savvy folks out there, how I structured my business, right? The one responsible for the videos you see on this channel. I set up an LLC a few years ago as a sole proprietor, and without incorporating, it means that the federal government basically sees your business as a pass-through entity. So that means all the income your business makes flows directly to you. You report it all on your personal tax returns, which can be a kick in the teeth if your tax rate is like 30% or so. I mean, you're paying 30% on everything you make. That really sucks. But this year, I elected for something known as S-Corp status. It means the company is still a pass-through entity technically, but I can elect to pay myself a reasonable salary when seen in the context of my lifestyle and the company's earnings. So I'm taxed on that salary, and any equity that I draw from the company is exempt from the self-employment tax, even though the equity draw, because I own 100% of the business and it's all technically passed through, all of that extra income is not double taxed, right? Whereas if you were just an LLC, you would have to pay Social Security, Medicare, Medicaid, and that would be no fun if you're making hundreds of thousands of dollars. So not only does it now restructure how I pay taxes, but it also allows me to save quite a bit on my taxes every year. It also gives me a reliable paper trail for loan officers to follow. See, technically, since I'm employed by my company now and not self-employed, at least again on paper, it looks considerably better on a credit application. It's very difficult to show consistent income when you're self-employed and not employed by a company, whether it be your company or someone else's. And running a small operation, especially if your industry is seasonal or spotty, can be a red flag for a potential creditor. Right? Some months you're making a ton of money, some months you're not making any money at all. If that's a seasonal thing, then you know exactly what that's like. And that's another reason why I set up the S-Corp. My company employs me, we handle payroll taxes monthly and quarterly now, and I can finally predict our personal income, at least to an extent, unless the company completely goes into the red, and then I won't be able to pay myself. But it looks more reliable and consistent to a creditor. So if you're trying to apply for a home loan, I would strongly consider an S-Corp if you run your own business. So I know this part was a bit off topic, but I do think it'll help those like me who have built a business from scratch and are interested in structuring it in such a way that will allow you to benefit not only from a tax perspective, but also from like an investment perspective. If you want to buy a house, let's say, it'd be much easier to do that, I presume, with an S-Corp and with a W-2, right? You being employed by your company. You just got to know the law. You got to know the conventions and stuff. I learned quite a bit about personal and corporate finance while earning my MBA, and I'm content with the degree to which I've applied it in my own company. I guess that's the one part of one of my degrees that I've used is kind of the money management business side of things. It helps. I'm trying to make sense of why I went through 6 years of college. I'll also show you guys a few additional shots of the house now, in case you wanted to see some of that. I didn't intend for this to be a talking head video, but again, there was a lot to justify here, and I think our family's making the right decision by choosing to buy a home rather than rent. It doesn't make sense for everyone. I understand that. There are great arguments for renting as well. But as our family continues to grow in the future, and hopefully the company as well, we'll have plenty of space to breathe. 5 bedrooms, something I never expected to be able to afford at 25 years old. And I'm grateful to all of you for supporting us on this journey. You're a huge, if not solely responsible for why we are here. Sure, I could be doing another job using my degrees, whatever, but I much prefer doing this. So at this point in the script, I had talked about mentioning some moving vlogs. Totally didn't get to that because, we just got too busy with it. But be sure to follow me on Twitter and elsewhere if you haven't already for some updates into the family life, if you want to know what's going on around the house. There was an incident a few weeks ago. They're building houses on either side of our property, and the construction workers just snapped our fiber line straight in half. Kudos, though, to Frontier, who just bought out Verizon Fios for sending a guy out the next day to set up a temporary fiber line around the backyard. It was really cool because much of what I do is, it's reliant on a stable internet connection, and I'm really glad that I live in a space where fiber is readily available. I pay $40 a month plus taxes to have 500 up, 500 down fiber, which is freaking awesome. I was paying, I think, $90 a month for gigabit fiber at my old apartment. And that was really good as well. That was with AT&T. Never had a single issue with them. But I one of the main reasons we moved here, not somewhere down the road, is because this place explicitly offered fiber through Frontier. So so far so good. If you want to see our internet setup vlogs and whatnot, you can check out this video here. But thank you guys for watching this far into the video. Consider subscribing if you haven't already. And I'll catch you next one. Let me know if you like this style of video. If you like me just talking about stuff. I'm not sure how well or poor this video will do on the channel, but I figured there was some decent information in it, so why not put it out there? I wanted to be upfront and candid about some of the things going on in our personal lives. Money's fun. It also can be super stressful, so manage it well. My name's Greg. Thanks for learning with me.